inordinate amount of Bitcoin has moved between investors over this 50 to $60,000 range. So if you look at the supply, it's a huge amount of coins that moved. So when coins move between investors, someone's buying, right? And if you're buying at a given price, you think it's a fair value. And when a whole lot of the supply is being moved around and being bought at that range, then the mindset of investors is that that's a valid price. If it shoots up really high and only a small amount of the coins trade, it's not very valid because not many people think that's a fair price. They're not buying. So we had a huge amount of coins move, and so what I'm saying is that in the $50 to $60,000 ranges, it's $1 trillion of market cap for Bitcoin. So it's a $1 trillion asset class, and that's very much validated, cemented. I'm not saying it'll ever never go below, but it's very unlikely that it'll drop below this sort of $50,000-$60,000 range and be sustained, given the amount of price discovery we had. So it's formed a really good base for it to move further up and see what the price discovery is higher up. But if it ever comes back down, this is an area that we'll revisit and it'll be pretty valid, well supported. So I don't really think Bitcoin will drop below the $1 trillion mark in the future, not for sustained periods of time. It may dip very, very quickly, but I think that we're now, going to move up, and that's significant for Bitcoin because, all macro asset buckets that people store value in, whether it's real estate, equities, bonds, whatever. It's all, units of trillions of dollars. So Bitcoin's kind of like this little baby that's just broken into that club. And yeah, I think, and also given the adoption of it, which is going exponential, time's running out for it to drop below this zone as more and more people enter.
So what else are you seeing on chain? I mean, I'm reading a lot about how the Bitcoins are not really moving hands, right? So people are holding.
Yeah, there's a lot of more and more of the supply that has been moved to what we call illiquid holders. That are these people that have a history of accumulating coins with very little selling. So that trend's continued. Notably, a lot of coins are moved off the exchanges. So people are buying the coins, scooping them up, and like the inventory on exchanges where they usually traded or sold is depleting. So that's another good sign. We've had that. It's unprecedented, really. It's been running like that for the good. It fluctuates, but for the most part, it's been depleting for a year, and that's a new pattern. So if you were to look at Bitcoin over the last 12 years, it started off with more and more coins flowing into the exchanges from those early guys that mined it from as early as 2009, 2010 onwards, and they were selling in, and so the supply started to fill the exchanges, and it was traded. And around the COVID crash, like a year and a half ago, I guess, there was a sea change of activity, and that behavior started reversing, and so a lot of the coins started moving away from the exchanges and being locked up into cold storage under people that are hodling. So that's been going for a very, very long time, and it's, if you look at the long arc of 12 and a half years, this last year's had this complete behavioral change. So that's a very bullish sign. It's not all, well, we've also seeing that there's what Glassnode, the on-chain data provider at Glassnode, they have a metric called long-term holders, which is essentially coins that are being locked up in wallets for 5 months or more, right? And if they're been in a wallet and they've aged for 5 months, there's very little chance that they'll be sold. Like the probability starts to drop off a cliff that they'll sell. And so if you would look at that cohort, that's been ramping up and up and up, and now we're at peak levels. And so those guys are now starting to sell into this kind of rally we've had from 30,000 to the mid 60,000s. So, there are people selling into it and people taking profit. But that's actually what you want to see, because in every really strong rally, you see these guys start to sell into it, that have been around for 5 months. They probably bought in the first quarter of this year and made substantial profit. And, it's a real good indicator because you can kind of measure how much of those coins are out there. And as they start to deplete down those 5 months coins, as they sell, obviously now they'll start from zero, day one, day two. So that side of things, as it starts to like bottom out, then we're reaching the top of a bull market. And the good news is that they've only just started selling, so it usually takes many months for that trend to sort of reach its end. So like that's telling us that we've got probably 3, 6, who knows, even 9 months of a rally ahead, but yet to see how that progresses because it changes every week. So yeah, everything's relatively bullish on the longer, like sort of the weeks to months out from here. Like anything can happen within a day or hour, but months out, it's pretty bullish.
Well, that's really interesting to hear. So, why do you think it hasn't broken that 70 mark? Because obviously the all-time highs are exciting, but I mean, they're not too far from, the 60s we had earlier this year before the big correction. So, why can't we break 70?
I think, well, the market's been a little bit overheated. We had the ETF that was announced, so there was a lot of speculative buying that came in, and a lot of the people that have bought are more speculative in nature. And so, if you were to look at where we sit in terms of what I call supply shock, which is the ratio of those guys that are really strong holders to the rest, like I would say the ratio of coins held by these really strong holders versus more speculative hands, we're not at the ratios that we saw in the first and second quarter before May. We're actually climbing up there, but not at the same levels where we last touched the $64,000 range. So structurally, you could say we're not as bullish on chain, at least, but we've also had a lot of changes with the ETFs being approved. So those ETFs are futures based. They're not actually buying Bitcoin. They're actually buying futures contracts to get exposure to the price.